I just realized this is the last market report of the year, which means our next market report won't be until January of 2024. And I'll be doing a complete year in review for the real estate market in Northern Colorado. I was literally like minutes away from shooting this video and I was checking the news, I was checking my stocks, and I looked, and all of a sudden, everything in real estate was going way up. And I was like, what is going on here? So I just checked, and the Fed has a recent announcement that's affecting the housing market. And we're going to talk about that and the local market here in Northern Colorado and what happened in November right now. Hey, if this is your first time to the channel and you want to know everything there is to know about living in Northern Colorado and especially the Northern Colorado real estate market, then make sure and subscribe below and tap the bell for notifications so you'll be one of the first to know about what's going on in our local market. My name's Jeff, and I get calls, texts, and emails from people like you all the time who are looking to make their move in or out of Northern Colorado. And I absolutely love it. So whether you're thinking about moving today, tomorrow, next week, or next year, it's never too early to reach out to me, because the earlier I hear from you, the better that I can help you, the better I can get you acclimated to what it's going to take to buy or sell a home here in Northern Colorado. Today, we are jumping into the market data for November of 2023. But before we do that, a few things I want to talk about first. Number one, happy holidays, and thank you so much for watching my videos. I really appreciate it. It means a lot to me. It helps me grow my business, and it really helps because, let's face it, buying and selling a home is probably the largest financial investment that all of us make. So it's really important to know exactly what's going on in the market. Okay, so real quick, before we jump into the market statistics, which I'm going to do in a minute, I'm going to show all the statistics for Boulder, Fort Collins, Greeley, Longmont, Loveland, Johnstown, Wellington, and Windsor. I'm going to go over the average statistics for all of those locations together, and then I'm going to break down each location by location and get into the specifics. So if you're looking to move to any of those areas, I've broken them down by chapters below, so you can just fast forward to the exact chapter that you want to learn about for the location that you're going to be moving in or the location you're going to be moving out. Okay, so what is this news that I came about just right before shooting this video? I mean, literally like 15 minutes before I was prepping for this video, and I happened to look at my phone. I was looking at the stock report for EXP World Holdings, Zillow, Redfin, Compass, and everything was through the roof. One of them even at double digits. And I was like, wait a minute, this is a little odd for all of this to happen all at once. So I popped open a web browser and I looked, and sure enough, there it was, staring me right in the face. Fed keeps interest rates unchanged and sees cuts in 2024. So what that means for you is that there are interest rate cuts coming in 2024, meaning interest rates for mortgages are going down. By how much? We don't know exactly. However, what the Fed has said is they would have up to 3 individual rate cuts totaling up to 75 basis points. Now, what that means is that this is for the Federal Reserve. This is the federal funding rate that the Federal Reserve loans out to banks, who then loan to us to purchase property, to get credit cards, to get home equity lines of credit, savings accounts, CDs. All of those rates are affected by that. So when the federal funding rate goes down, that means it's less expensive and cheaper for us to be borrowing money from the financial institutions that we traditionally get mortgages from. So if you're thinking about buying, that's great news, because rates come down, mortgages are less expensive for you, your payments go down every month. If you're going to be selling, that's great news for you, because buyers who have been sitting on the fence waiting for rates to come down are finally going to get that. And we have buyers that are waiting on the fence, just waiting to go as soon as rates come down. So overall, this is great news going into the end of 2023 and the beginning of 2024, knowing that we're going to see a better market for both buyers and for sellers. So let's not waste any time. Let's get into the report right now. got a little chilly, so I put on a sweatshirt, got my glasses on. We're going to dig into this report. Something that I found out that was really cool about this report is that there's some data that's only specific to this area that you see here right on the screen. For those of you who have been following me for a while and you've been receiving this monthly report, getting the PDF and a little bit of text interpretation as to what's going on is one thing. But really digging in and taking the time to understand what this report's all about and how that affects you as a buyer or a seller or someone who simply lives here and wants some additional real estate information. So here's what I found. As we go through this report, the numbers that I'm going to give you, unless I indicate otherwise, are for this area right here. And this area is what's considered area number 9. Now, if you look closely, really what this is you'll see I-25, the corridor, just straight up all the way to the edge of Wyoming and then straight across and then down and across and basically through here. All right. Each one of these areas is broken into a sub area. These sub areas 9-1, 9-2, 9-3, 4, 5, and so forth and so on all the way through. So the statistics moving forward, just understand that that is going to be for these specific areas in area 9. As I mentioned before, I will also be breaking down each individual area of the 9 areas that part of this report is included with. I will get to each one of those. Again, they will be broken down by chapter, so you can go to the area that you're most specifically interested in. Want to give a quick shout out and a thank you to the Fort Collins Board of Realtors for this report. The information, the data does come from Showing Time. It's compiled together for, again, Area 9, as well as the individual areas that I'll be going over here in a minute. Thank you to Carrie, who helped me understand why these numbers weren't making sense when I originally was digging in super deep on this report to explain to you what's going on here in the Northern Colorado market. All right, so in Area 9 for November, new listings were up 3.4% for single-family homes and 42.1% for townhome and condo properties. 42%. That is a massive, massive increase. And we're going to get to how that fits in on the individual levels here in a minute. Pending sales at 108 for single family and 38 for townhome and condo properties. You're going to see how that plays into what the norms are when it comes to where we are in the market, especially getting here towards the end of the year. Median sales price was actually down 2.1% to 572.5. Now we've seen continual increase month over month over month over month. And now that we've seen a bit of a shift in the other direction, there's no reason to panic on this. I guarantee once you see the rest of the numbers, it's not a big deal. For single family, and down 13.4% for townhome condo properties. Days on the market increased 14.8% for single family, which is going to be important. Again, I want you to keep in mind days on market is a big determination of what's going on in the market. And you'll see how everything like from interest rates, inventory, supply and demand, everything factors in to how these numbers all shake out. They did decrease 1.4% for townhome style. Why am I having trouble saying that today? Townhouse condo properties. Did you know the difference between a townhome and a condo? Here's a little fact. Now, if you know the answer, go ahead and comment down below. Let me know that you know the difference between the townhome and a condo. And I'll tell you real quick, and we'll get on to more of the numbers here. The difference between a townhome and a condominium only owns from the drywall in. In other words, everything outside of that is owned by an HOA, a management company is usually involved, and so forth. So if something goes wrong out there, you call the management company, and they get that taken care of. Your homeowner's insurance, as well as your insurance covers, when you're paying that, it covers the maintenance of the exterior and so forth into your HOA payments. Got it? Great. Down here, we get into the national numbers. I'm not going to get into those specifically. You can read through those which, by the way, the entire PDF report is down in the description below. You can download a copy of it, follow along, go over it afterwards, and know that I do supply these each month to you. I'll also supply a link down in the description for every report going back to 2019, once these reports were started to be put in place, so you can see some reference if that's something that you want to check into on your own. Okay, quick activity snapshot here. 1 year change in single family sold listings down 7.5%. That means 7.5% homes, less homes sold in November of this year than they did in 2022. Days on market, we touched on that already. It's up 14.8%. That is significant. That does mean something. Asterisk that. We're going to come back and visit that. Median sales price down 2.1%, as I mentioned. Not a big deal. I wouldn't worry too much about that, as you see the monthly indicators here. All right. Again, I want to refer to Area 9 here, mostly Fort Collins, Wellington, and the area to the mountains to the west. Okay, new listings, 123 new listings in November of 2023. That's up 3.4% from November of last year. Not a big, huge number here. And just know we're going to look at some bigger numbers, which when we look at percentages, make a lot more impact than when we're looking at just a sample of 123. Pending sales remained slightly about the same at 108 versus 104, up 3.8%. Sold listings. This is where we talk about inventory, less homes being sold, buyers waiting, and so forth. That has decreased by 7.5%. 124 sold listings versus 134 in November of 2022. Median sales price, I mentioned that before, down 2.1%. Not a huge deal. Again, we're dealing with a smaller sample size of sold listings of 124. Once you see the bigger numbers, this will all make sense. Average sales price down 7.2%. Again, it does go in line with what we're looking at, but look at these big numbers. 680,000. If we go back, I know I wasn't going to talk about the National Association of Realtors, like the US numbers. But if you look here, the average price is up 3.4% from a year ago to 391,800. And we're at 631,444. That's a pretty significant difference from what the national average is. So we're in a good position there. Homes are still selling at close to list price. We're just starting to see more price reduction. So 98% of list price is what these homes are selling for. The problem is they're taking longer to sell. Days on market up 14.8%. That's that big number I was talking about. Again, up from 54 this time last year. Affordability index. This is something that's not talked about a lot. And I want to take just a moment to explain what this is, because again, this is a very important indicator of what's going on in the market as it applies to all of us, whether you're buying, whether you're selling, whether you're holding tight and just watching the market. This applies to all of us. So the affordability index is a index that's being The affordability index measures whether or not a typical family could qualify for a mortgage loan on a typical loan. A typical home is defined as the national median priced existing single family home as calculated by the National Association of Realtors. So really what this means is that when you have a value of 100, which we have right now 47, which again, it went down a little bit. But when we have an index of 100, that means that a family earning the median income has more than enough income to qualify for a mortgage loan on a median priced home. Now, this is assuming a 20% down payment. Okay. So right now it's really only 47% really of median household incomes buying a median home priced home at 20% down would be able to afford. So we're not in a great spot when we look at that. I didn't mention these graphs here, but I think it's really good. This is a great time to actually look at the graph because you're going to see this when we break it down by each individual location. Look at how the affordability index has continued to decrease since 2020. Okay, we were in a pretty decent spot back in November of 2020, but each November since that, you'll see it continues to go down significantly. This was the biggest drop between 2021 and 2022. It hasn't gotten any better, as you can see here. It's gotten actually worse. And in this case, 2% from the same time last year. As far as the number of active listings, there's still quite a few homes on the market, 386 in Area 9, Fort Collins and Wellington, which is up 3.2% from the same time last year. Months of supply. Again, this is another good indicator. And if you notice, most of these graphs are pretty much the same, okay? They follow a very similar seasonal pattern, okay? When we get down to the active list, or excuse me, affordability index and months of supply, there's almost an inverse relationship here, right? You see the higher numbers here scaling down this way. But here we have the higher numbers this way that have scaled up from back here. Okay, so months of supply and affordability index. Just so you're aware, a 6-month supply of inventory is a balanced market. We are at a 2.3-month supply of inventory, which is up 21%. I have this cool tool. Look at this, 21.1% that it's up from the same time last year. So a 6-month supply of homes means if there were no more homes sold in the entire country, or in this case, in Area 9, from this point moving forward and no more were listed, it would take 2.3 months to sell out the current inventory. We have a shortage of inventory here when it comes to single-family homes. All right, the townhome condo overview. Now that you understand these graphs, I'm not going to hit each one of these specifically unless there is something that really stands out. And as you can see in this case, new listings for condos up 42.1% from last year at this time. 42.1%. That is way up. Now, again, we're dealing with a little bit of a smaller sample, 38 last year at this time versus 54. There are condos that are being listed. But if we look again down to the days on market, they actually haven't changed that much from last year at this time, right? They've actually gotten a little bit better. Now, that is normally what happens when the market gets more saturated with a certain type of property, which in this case, there were that many new listings. Quite a few sales as well, 38 sales in November, which was up 15.2% from last year, which of course, when you have an increase in pending sales, what usually happens after that, right? More listings sell. 54 more listings sold on the townhome. Median price went down. Look at these big numbers. These are all significant shifts from last year at this time in the condo market. Some up, some down. So really what's going on in the condo market? I think it's worth investigating a little bit more. But as you see, a lot of active listings still out there. Month of supply is up significantly. If you're thinking about buying, now is a very good time, especially for investors, to get into the condo market. If you're also thinking about buying, maybe you're a first-time home buyer, you want to buy a little bit on the lower scale, a good entry home in a condo or a townhome, this would be the way to go. Oh, I didn't finish the explanation of the townhome condo deal. The townhome, actually you own, there's usually a yard involved, not all the time, but you actually own outside of that as well. So you really own everything from the ground up, as we say. The condo, everything from the drywall in. So I hope that makes sense. All right, moving forward here. New listings, we talked about this before, 123, which is up 3.4% from last year at this time. This is single family. Townhomes, big time increase, right? Up 42.1%. Single family year to date, we've seen a decrease. We know that less and less homes are being listed, except in the condo market, where those have gone up 10.5% from last year at this time. You'll see in each one of these slides moving forward now, historical listings, new listings by month. You'll also, I want you to look at peaks and valleys. This is seasonality, as we call it. All right. And if you look, most of these graphs are going to follow a very similar up and down pattern. But what I want you to look at are the highs, and then look at the lows and see where these differences are coming into play. Most specifically right here, you'll see right here, this is one of the lower ones that we've seen in pretty much history going back to 2010. This is probably the lowest. This is maybe close right around COVID time. But other than that, the last few years, it's kind of remained steady. We started down here, and now, of course, we're down even lower. So again, this is November. December, of course, we will pop down here. Pending sales, we talked about that, up 108, or excuse me, to 108, up 3.8% for single family, 38 for townhomes and condos. Year to date, again, we've seen a continual slide down over the last 3 years. Pretty significant for single family, not as much for townhomes, but again, still going in a negative direction. Although pending sales are up overall 3.8% from last year at this time. Again, the graph here, peaks and valleys. If you want to look at that, here we are now. These date all the way back to 2010, so you can see a historic view of it. Again, if you haven't subscribed to the channel, make sure and subscribe below, tap the bell for notifications so you'll know when I release these reports and I go through them. I will be getting to the individual reports here in just a moment. But also they're broken down by chapter. So if you want to forward onto those as well, I won't take it personally. This is for you guys. Happy holidays again. Sold listings down 7.5% for single family. Again, these are month slides. Townhomes up. We already went over that. Those have been selling. A lot more have been selling because a lot more have been put on the market. They're also taking longer to sell. Single family homes, again, you're going to see this pattern throughout, so I'm not going to beat a dead horse here. But again, sold listings for November of this year, overall, we're down 7.5% for single family and up 28.6% for townhomes. All right. Median sales price overall down 2.1%. 572.5 is a good place. Now, here, this is cool. Again, 2010 on the historical median sales price by month through 2023. What have we seen? We all know. We've seen an incredible market. Look at this cool blip here that we saw. This was right after COVID when we had a rebound. Okay, we were down. We had a rebound during COVID. Well, guess what we're starting to see now? A continual decline. Now, it hasn't been significant. We're sitting right here now. If you were to draw a line across, okay, we're still sitting way better than we have been. So again, we haven't seen a significant decrease. This is nothing to be too worried about. Average sales price, 7.2, 631, 444. Again, we're not dealing with a huge, or 409. I keep neglecting the townhomes and condos, and I apologize. Down 12.1%. Once again, upward rise, post-COVID recovery. Again, we see seasonality on all of these peaks and valleys. Now, this is a 13-year study, so it's going to be a little bit less. But, I mean, if you look, I can't tell you exactly what this was for the condos. Something was going on there, but you can see they follow suit. I'm not going to go over percent. We talked about percent of list price, 98.3. Which is good. You can see it doesn't change that much, but it's gone down from 100 where we saw a couple years ago, 102. Where this is when things were selling off the charts for more than list price in a lot of cases. Again, COVID rebound, and then a significant downward. I don't want to say downward spiral, but if you look over the history, I mean, the only times that we've really seen this are maybe 3 or 4 times in the past. And look at these 2 in the last 2 years. So I know a lot of volatility in the market, but understanding where things are at can really indicate where things are on their path to where things are going. Days on market. This is super important to understand. Look at this right here. Okay, for both single family and townhomes, they're double digit increases in days in market on here, almost 200%. Okay. 50% back in February, 22% September, October, just 26%, November, 14.8. So that's an improvement, right? We know days on market have been increasing. We've just been seeing a significant increase from this entire year on both sides of the equation, from the single family and, of course, on the townhome style. Here's where it really hits home, right? Historical days on market. Again, look for peaks and valleys here. Where are we at now? Historically speaking, probably not in the best. If we were to draw, I know that's not a perfectly straight line, but you get the gist of it. You see a lot of it above and there's some below. We're right about on that line. So not necessarily a bad place. We're seeing things even out. This is as I talked about before, the interest rates and stuff, we have to see some balancing here. Affordability index, again, we talked about this. This index measures housing affordability for the region. Now, in this case, it's for Area 9 until we get to the individual reports, which will make more sense. 120 means the median household income is 120% of what is necessary. The reason why it's saying 120% because of 20% down payment under the prevailing interest rates, which in November were probably 7%. I shouldn't say 7, probably, but they range depending on where you're getting your money from. A higher number means greater affordability. We talked about it's at 47. It was better in January. However, if you look at these numbers, they've remained pretty similar throughout the year. For both townhomes and condos. Not a significant change. It's unfortunate because in 2021, we were looking really good. 109, 112. And now, we're sitting at 71 for town or 75 and 47, 109 and 71, 112. That's a really big bump there. That's almost double. Look at that there. Those are really big. Affordability. This is not what we want to see. This is not what we want to see. Your crystal ball is as clear as mine. My estimation and my guess here is with interest rates being held constant and some decreases along the way, we'll start to see this tick up. Whether or not we're going to see these levels again, I don't know. I mean, it's taken this many years, 10 years to get down here. My guess is it would take at least 10 years to get back up to probably this area. All right. Inventory of active listings, they haven't increased that much from November of last year until now. But if you look historically, what happened after the COVID rebound? Look at these numbers. So what happens when the market gets flooded with listings? It puts pressure on the pricing, right? And this is where days on market started to increase. We've seen a number of expired listings come up in September, October, and November. And there's also seasonality here when we look at the graph. Okay, where does it spike? Right after, this is the summer months. If you look, it's really in between, right in the middle of all of these boxes here, right? The summer months. Where's the lowest month? January, right? So where are we right now, right? Summer months, we're still dipping, right? We'll probably end up somewhere down here. Condos probably end up somewhere down here. So very, very shortage of inventory. It was caused by so many houses flooding the market and the number of sales. So we have a months of inventory. Again, surplus. Look at all these numbers. Up, 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 up. All right. The graph. Look at this. Down, 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 down. All right. Okay. These are all the properties, and again, in Area 9, just to give a complete overview of the breakdown of all of Area 9. New listings up 12%, pending sales up 6.5%, Sold listings, not a whole big increase there, a little bit. Oops. We'll just move on from that. Days on market, again, massive increase there on both sides. Active listings way up, months of supply way up. We've talked about this. We're sitting here. We've seen a great market here, an even better market here. And this is tough right here. This is tough right here. There's a lot of houses that are sitting on the market. That's just where it is. Affordability index, again, that's not where we want to be. We want to be up here. All right. This can get very granular on the sold listings. Now, here's where we're shifting gears into the entire report that includes Johnstown, Windsor, Loveland, Berthoud, Boulder, Fort Collins, Longmont, Greeley, and Wellington. So 9 cities and towns. That's why you'll see bigger numbers, right? Single family sold listings, almost 2,000. That's for all combined. Okay. I'm not going to spend too much time because we can get very, very granular. But look at the rolling 12 months. It kind of goes with the graphs that we've looked at so far moving forward. Same here, right? Here we go. Now this right here, I think this is important to look at. 500K to 699K are where the most homes are selling. And that's, of course, where that average is. So keep this in mind. This is a great slide to look at if you're thinking about selling, especially to see where your home may fit in, because the more homes that are selling in that price range, the more competition, and yet also the more demand based on some of the other areas where they may not be selling as much. Don't need the glossary of terms. Okay. Here's where we're going to break into the individual towns. If you've stuck with me so far, thank you. I'm going to have a sip of my coffee once again. Happy holidays. I hope this report helps. You guys probably didn't notice this, or maybe you did. Look at, dang cat tore up my Santa hat, man. It's all good. All right, so we're going to start with Wellington, Colorado. Not anything, huge numbers here. 15 single family homes listed. 1 condo, townhome. So when you look at percentages in this column here, take that with a grain of salt, down 25%. Sounds like a huge decrease when we're talking about a very large number, but it really went from 20 down to 15. Percentage-wise, big difference. There were still 15 families who listed their homes, and we'll get into the sold here in just a second. Closed sales, there we go, 14, right? So that's a nice even trade. 15 listed, 14 sold, and 14 new folks to their homes in Wellington, and 14 people who have moved on. Median sales price didn't change too much, 489 to 486.5. Average sales price didn't change much at all there. And actually that is, 3.8% doesn't sound like a lot. But this is really about $21,000 in your pocket, or in a seller's pocket, a buyer's pocket, an investor's pocket, whatever it might be. 98% of list price. That's great. Days on market went down a little bit in Wellington. Yay, Wellington. That's a great thing to see. That means homes are starting to sell a little bit faster. There's not that many homes for sale in Wellington. There's really not. Right? So if you're thinking about selling and you live in Wellington, know that there's not a lot of inventory in Wellington, especially in relation to some other places that you'll see here in just a moment. Months of supply went down, of course. That usually is right there in line with months of supply of inventory. Townhomes pretty much followed suit. Closed sales didn't change too much, though. Look at that, 3. Again, very small numbers here. Days on market, here's a concern. Now you can see it on a granular level, up 187.2%. That's definitely something to look at when it comes to the condo market. Again, it was that backlog of condos that were listed. Inventory, there's currently 11. There wasn't any last year at this time, and a 4.9 month supply. You'll also see a graph for each location down here at the bottom from 2018 to 2023. Again, appreciation, but what have we seen recently? We're looking right here in 2023 and evening out of pricing. We've been talking about this for years, and this is what the Fed, when they adopted and increased interest rates right around 2022, there was 12 consecutive increases that eventually hit here, right? Was affected right here. Median sales price, even median sales prices come down some for condos, but we talked about that. All right, that is Wellington for you. Let's move on to Greeley. New listings down 12.4% from 97 to 85. Closed sales were down significantly, cut in half. Again, not as many sales occurring, which of course then puts downward pressure on the price. People have to start lowering their price. Median sales price down from 413 to 388.5. Average 434 down to 424. Days on market, they didn't change too much in Greeley. Good job, Greeley. Holding tight. Inventory of homes didn't change too much. Months of supply went up by 60%. So, which I find interesting that went up by 60%, that there's that many months of supply of inventory. But it only went down by 0.9%. Interesting. But that's why we look at these reports to see, because there's obviously something going on there. Townhomes and condos, again, not a huge change, not a lot of activity with 15 this year and 18 last year. So down a little bit. Closed sales pretty much remain the same at 16 and 14. Median sales price 326, down up from 325 last year. So not a huge change in the condo market as far as value. The only significant change, again, is days on market. This is really, again, you're going to see this come up over and over again, days on market. So if you're thinking about selling, understand things are taking a bit longer right now. If you're buying, understand that there are more homes that are going to be sitting on the market a bit longer. It does give you some ability to negotiate potentially. Again, the median price, we're seeing the leveling out once again. This is not going to change from location to location. Longmont, now we're seeing a more activity, 68 new listings versus 62, not a huge change. Sales closed, sales were down 32% from 85 down to 57. Nice, healthy median sales price of 650, average of 784. These have significantly gone up in Longmont, which is great. We love to see that. Days on market increased by 22%, but not too many. Homes are selling quickly in Longmont. Very popular area. Inventories down, months of supply up. Down 10%, up 15%. Not a lot of change in the condo market, except for the closed sales, again, down by 10. Big percentage drop there. But again, a smaller sample size. Look at these condo prices. 493 median, 471 average. That's a nice priced condo right there. Huge drop in the inventory. There was a lot of sales, right? Well, there wasn't. It actually went down. But the inventory is down significantly. Seasonality. This is that time of year, November, December, January, things ramp back up. Remember those bumps that I showed you on the graphs? That's what that is. So that's Longmont for you. Here we are in Fort Collins. These are even bigger numbers. 98 new listings in November of this year versus 115 last year, down 14%. Closed sales were down to 110 from 145 last year at this time. Significant increase in days on market again. These are the big ones. And of course, month supply of inventory, we have homes that are sitting in Fort Collins a little bit longer. Median sales price, 577, average 633. Not huge changes from last year at this time, although they've gone down a little bit in Fort Collins. So if you're looking to buy in Fort Collins, push the price down. If you're looking to sell, understand you may need to have some flexibility and a good understanding of what's going on here in the market. Townhomes, again, same thing as far as days on market. The big increases here, 39, 20, and 64% respectively for days on market, inventory, and so forth. These are big pluses here, you guys. Big pluses. Okay. Again, the graphs are remaining the same on both. This one's a little steeper for the median sales price for condos and townhomes in Fort Collins. So people who invested in 19 and 20 have seen significant appreciation on those. Single family has been great as well. Just doesn't, it's not as steep when you look at these graphs. All right, let's get into Berthoud, a little bit smaller, less people, less populated, and bigger numbers. 30 new listings over 20 from last year, up 50%. Closed sales, 66% more. 15 last year, 25 again. This is for single family. We'll get to the townhomes here in a minute. Median sales price went down. That's a bit concerning. However, the average sales price went up. So there was obviously a very small one or a very big one in these closed 25 sales there. Days on market actually went down. Good job, Berthoud. Congratulations, bucking the system. But there's more homes for sale now, so there's an increase in inventory. And this is usually what we see, the pluses. We showed you before, a plus and a minus. That's not always, it doesn't always make sense, but we have to at least acknowledge and see what's going on there. Townhomes and condos really followed suit. There weren't too many sales last year at this time, and we had 5, up 400%. So again, take the percentages with a grain of salt and really look at where things are moving. Closed sales remained, 5 and 3, which of course went up because there was more this year. This was less. So 470 median sales price, down from 706. But again, last year there was really only 5 sales to go off of. I wouldn't go off of any of these percentages too much. It's really just keeping a look at what's going on in these particular areas. Boulder, 1.36. This always stands out when you look at the median sales price and average sales price. Okay, 55 sales this year versus 63 last year, down 12.7%. Percent of list price received, a little lower than what we've seen in some of the other areas, 98, 99%. Days on market till the sale, hanging par for the course, going up. They were 69 in November versus 56 last year at this time. There are a lot more homes for sale, 233 versus 195 last year at this time. Months of inventory, again, going up. Townhomes and condos has followed suit. Look at the average sales price for a condo in Boulder is almost $700,000. New listings, 35. New ones, 46 sales. These percentages haven't changed too much here. Of course, again, days on market, significant increase, 40%, 20 more days. That's another mortgage payment, another month that you're in your home, another month that you can't get to where you want to get to and move on, and so forth. We've seen a significant leveling out in the pricing, especially in Boulder. I know this is still a super high number up here, 1.36 million, but that's, relatively speaking, it's only increasing 14% versus 20, 30%, which we've seen the last few years. All right, Loveland, 78 homes sold in 2023, down significantly from last year at this time. So something was going on last year at this time. There must have been a mad rush in Loveland, down 30% from last year at this time. The median sales price is hanging tight at $520,000. It's still up 6.2% from last year. If you're thinking about selling, that's the main number you want to look at. Median sales price. You can take a look at the average, but that's going to include, potentially a couple $1 million sale or something like that, which may throw the numbers off. 636, 660, but really go off of that median and then look at both, because there's a significant difference in those percentage increases there. Days on market was up again significantly there. Inventory of homes is down in Loveland, so there's not a lot. It's putting a little bit of pressure on price, right? All right, condos and townhomes, average 420 or median 429, average 466. Closed sales were down significantly, but there weren't as many homes on the market, right? Only 20 listings in 2023 versus 58 last year. It's down 65%. They're still selling at 100% of list price. However, they are taking 41% longer to sell, 68 days versus 48 last year. Again, the evening out. This doesn't change from area to area. Be focused on this area here. And if you notice, we haven't seen anything like this in the past 15 years, right? It's been up, little bumps, little bumps, little bumps, but nothing that indicated a downward slope and evening out. Downward slope and evening out. So keep an eye on this. Windsor, great activity out in Windsor. 90 new listings versus 72 last year, increase of 25%. Median sales price went down a little bit though, 10.1%. Average sales price didn't change that much. Homes are still selling 98, 99% of list price. Days on market didn't change too much from last year, 65 versus 64. Inventory is down in Windsor, so not as many homes for sale versus last year at this time. Inventory hasn't changed that months of supply, 2.3 and 2.6. Not a lot of condos and townhome activity in Windsor, 10 this year, 14 last year, only 8 sales. Good price though, 535 median and 527 on the average for the condos and townhomes. They're still selling at above or close to a list price versus last year, way above. Days on market, not a whole big change. Inventory of homes, there's actually more condos for sale now, where there are less single family, but more condos. So if you're looking for a condo, there are probably some good deals out there. You'll see a big dip in Windsor. Windsor definitely took a significant decrease there, as we see up here from 703 down to 632. All right, so stuff going on in Windsor. We'll get into Johnstown and we'll wrap this whole thing up here. 39 new listings versus 34 last year. Not a significant change. Again, smaller numbers, so it shows up as what would look like a bigger percentage. Holding tight at 494,000 on the median, 522 on the average. Not a big change there. Stuff still selling close to list price, which is awesome. Days on market has gone up significantly, and that's just part of what's going on in this market. Less inventory though, so that's gone down. Not as many homes for sale this year as there were last year at this time, which is causing these homes or the sales prices to remain steady. The month of supply of inventory hasn't changed that much. Not much going on with condos and townhomes in Johnstown. So if that's what you're looking for, probably not the best place to be looking. Although the ones that are in there, great price at 385, 374 on the average. And there's more available. So go check those out. Higher month supply of inventory. So there's not a lot, but what is out there, you could probably get a great deal on. So, well, that is going to wrap up the November market report for 2023. Excuse me. We'll wrap this up here. I appreciate you spending this time with me going over this report. I hope it makes sense to you. Ask your questions down below. If there are areas in Northern Colorado that you'd like more information on that's not covered in this report, in this video, comment down below. Let me know. I will add that into the report. If you haven't subscribed to the channel, make sure and go ahead and do that below as well. Tap the bell for notifications so you'll be one of the first to know when we release these videos, when I'm getting these reports out, because things are changing. And if you're thinking about buying or selling, go ahead and give me a call, shoot me a text, send me an email, schedule a Zoom call down in the description below. I love it when you guys reach out to me. The sooner you reach out, the earlier I can help you, the better I can help you, the better we can get to know each other a little bit better. Said that better a lot, didn't I? All right, we're going to end this for this month. Again, happy holidays to all of you. Our next video is going to be in January, and we're going to do a full year in review. And I look forward to seeing you. Thanks again for your support. And until next time, see ya.